All right, so today we're going to talk about some situations or some issues that people normally have or traders normally have when they're trading. And we're going to talk about 5 of those issues. So number 1 that we're going to continue is going to be, I can't seem to hold my trades longer for it to go into like 40 pip profit, 50 pip profits, whatever profit target you're looking at. And the biggest reason why that's not really happening is because of lack of confidence, because you got to look at it this way. Whenever a trade goes in 15 pip profit, right? 15 pip profit, 20 pip profit, you're more likely to secure those profits, and then you just walk away from the charts, or you're still looking at the charts, and then you notice that price is continuing to move in that direction, and now you're thinking, ah, man, I knew this is going to go to the point where I thought it's going to go. If only I would have held a little bit longer. You know, now that comes from lack of confidence and also lack of experience, right? Now, experience, when I talk about that, that means that you're not experienced enough to letting trades run, or you're not experienced enough to being in a live trade to be able to let it run. Because if I want to talk really frankly, it takes a lot of balls to hold a trade, right? And a lot of you guys can relate to that. It does take a lot of balls, right? Because if you're taking a trade, right, let's say you have $1,000 account and you're on a 20-cent lot or a 50-cent lot, and you're like, okay, you know what, I'm going to hold on to the trade, and trade is in like 20 pip profits on a 0.5 lot, and now you're up like $100, 10%, which is a lot, you know, still a lot of risk to begin with, but some people do that. So we're going to talk based on that perspective. Now, you have two options. Whether you can let it run, or you could say, okay, let me just secure profits and then call it a day. But when you secure profits, price keeps running. That's because there's lack of confidence. Now, how do you solve this issue of having no confidence holding a trade? Are you guys ready? I'm going to give you a really good tip. And the really good tip is to close 90%, because you got to build confidence, right? So look at it this way. When you're playing Need for Speed, or like Need for Speed 2, Need for Speed 3, Hot Pursuit, if you guys are old enough and if you guys have been around long enough, you know that there was Need for Speed 3. If you've played Need for Speed 3, you would play a track, and then you would get confident in that track, and then you would move on to a much harder track, a much difficult track, or you're gonna change the weather conditions to rain or snow, more slippery, whatever. So you go up levels, but it takes time. Now, when it comes to holding trades, and when it comes to, like, you know, having that confidence in letting a trade run, you have to close 90%, because you have to be comfortable in letting a small percentage run. Because look at it this way, if you're running a 1 lot on a $10,000 account and you're up 20 pips, and now you're scared that should you close the position or should you let the whole thing run, right? Now that's a point where we come into where we have to decide that what should we do, right? A beginner trader is going to say, okay, I'm going to secure the position, but another mindset is going to say, okay, like, you know what, I want to let the trade run. But the best thing to do at this point to gain confidence and to get more comfortable is to close 90%, means close like 0.9 cent of the position and leave 10 cents running, or leave 5 cents running, or man, just leave 1 cent running, because you want to be in that position or in that movement as it goes beyond your expected target, or it goes to your expected target, which was much higher than where your comfort level was. You get me? So that's what you got to do. Let's recap this, right? So whenever you're feeling scared, or whenever you're having that doze off, like, you know, I don't know, like low confidence, secure 90%. And then leave the rest running. Leave the rest running to say where it's gonna go. Now, you do this once, you do this twice, maybe in the next 2-3 months you do this like, you know, 4 or 5 times because the opportunity was there. What's gonna happen after that, right? As you do this over and over again, your confidence is going to increase in letting smaller positions run, and the time will come where you're going to say, okay, you know what, I'm not going to close 90%, I'm going to close 50%, and then I'm going to leave the 50% run, right? So as your confidence increases in letting positions run, and your confidence increases in price going to your level of, like, you know, your take profit, or where you expect a price to go, you're going to be continuing to let more and more positions run, right? So it takes time. It's not going to happen overnight. It's not going to happen, next week, next month. You have to let positions run, but in small increments, right? And then increase the percentage as you go along. And another thing is, so my favorite way of letting positions run is that on Mondays and Tuesdays, I'm not going to let the full positions run. I'm going to secure profits at like 20 pips, 25 pips, 15 pips, whatever. But when it comes down to Wednesday and Thursday, when I know there's going to be bigger moves because now we're in the middle of the week, when you have Wednesdays and Thursdays, I'm going to be more prone to let a 50% position run, a 60% position run. And if I've made gains on Monday, Tuesday, Wednesday, and Thursday rolls around, and I know that the Thursday is an analysis that I've seen maybe last month, last week, now I'm going to say, okay, you know what? I've made my gains Monday, Tuesday, Wednesday. Thursday, I'm going to let the entire position run to see if I can make more gains, right? So that's how you get comfortable and you get confidence in letting positions run. Next, there are also a lot of issues where people say that I have a lot of Fomo when I'm looking at the chart, right? Like when price has already moved and you're like, oh man, like I should have entered that trade. I knew price was gonna go, and now price is moving bullish, 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 or let's say the price is moving bearish, bearish, bearish. Let me take a sell because I have a fear of missing out. I may miss the move, right? And that's the reason why a lot of you guys lose, all the time. Like I get messages in our members group all the time that, hey man, like price broke resistance, we moved up, and I took a buy when price broke the previous high, and all the time price just retraces. All the time price just, like whenever I enter a trade, price goes in the opposite direction. And the reason why is because you're having huge amounts of FOMO, right? And this FOMO is, so look at it this way. You have a bullish candle, and then you have another bullish candle, and after this you get a third bullish candle. If you're taking a buy on the top of the third bullish candle, that means you're anticipating the fourth bullish candle to continue pushing up. Now you got to ask yourself this: what's the probability that the fourth bullish candle will continue moving bullish versus what's the probability that the fourth bullish candle will retrace to create support and to retest the high? What's the probability? Tell me. Like a lot of you guys are going to say, yeah, there's a high probability we're going to have a retracement, but still, as price goes up, reaches the high, you get FOMO, and then you take a buy anticipating price to continue pushing up. How does that make any sense? Right? Very rarely price is going to continue moving bullish. It's very rare. It's not going to happen all the time. So when you're getting FOMO, just know this, right? So what I did in the beginning, I used to get a lot of FOMO. I remember back in 2016 when I first started, and I would see gold push down. I would try to take sells and price would retrace, or I would try to take buys anticipating a retracement, but price would continue pushing down. I was just losing. No matter what I did, I would still lose. So when you're having FOMO, this is what I need you to do. Whenever you see price move up violently, or whenever you see price move down violently, wait for a retracement. If price moves bullish, just know this. Tell yourself that if price is moving bullish, there's going to be a probability that we will retrace, we will create a support, and I'm going to look for a buying opportunity for price to retest the high. And the same way, if price moves bearish, understand this: whenever price is moving bearish, force yourself to acknowledge this, that okay, there's going to be a retracement, I have to wait for retracement, I have to wait for a resistance, and then I have to take a sell for price to retest the low. These two things are going to happen over and over again. And the moment I explained this to myself, and the moment I really understood that, okay, this is exactly, to be honest, this is the only thing I gotta wait for. That's amazing, because whenever you're looking at a chart and you're seeing prices just pushing up, or you see prices just pushing down, that's the best scenario, because all you gotta do is wait for retracement. That's it. Just wait for retracement. And that's how you're gonna solve FOMO. But it's also it's a lot to do with psychology as well, because if you have a fear of missing out, and you've missed out, just tell yourself, hey man, I've missed out on the trade. If there's going to be no retracement in the time that you need to trade, then you've missed out on the trade, It's okay to miss a trade, because in my experience, what I've seen is that if I've if I have cried over a trade that has already moved, I know that that same move is going to happen, tomorrow, or day after tomorrow, or next week. So there's no need for FOMO, because the same things happen over and over again. I've spent like 8 years in trading. I've seen so many moves happen over and over and over and over again. So FOMO is solved by just waiting, right? If you want to execute as price is moving up or down, just wait for retracement. That's it. Now, there's this one more thing that people say all the time. They're like, hey man, I trade news and I lose. What do you expect, man? I trade news and I lose. Just stop trading news, right? Just stop it. There's no need for you to trade news. I know a lot of people are inclined towards trading news. I know a lot of people, they want to make those quick gains by trading news with buy stops and sell stops. I mean, me included, but I have experience, right? With buy stops, sell stops, you're trading news, your stops are getting slipped, your positions are getting slipped, your pending orders are getting slipped. You're basically getting screwed around like a rag doll in the market. Like, what good is that? The probability of you making a huge profit on news over 12 months is very, very low, especially when you're trying to trade NFP, CPI, FOMC, retail sales data, unemployment news. All these news events have different probabilities of working out or not working out, being slipped or not slipped. These news events, they have different data. Unless you're gonna focus on just one news event and just trade that, you're not gonna have enough sample size to say that, okay, you know what, I'm profitable on NFP because I've traded NFP 12 times for the last year, because there are 12 NFPs in 1 year, and now I can continue doing that. Right? So it takes time. You can't trade NFP and then trade CPI and unemployment and say, oh yeah, I'm not profitable trading news, because you don't have enough sample data. Why would you do that? So the simple answer is that if you trade news and lose, just stop trading news. There's no need for you to trade news, man. Just stop it. So you have to just stop trading news. Now, there's one thing that people message me all the time now, is that my spouse or my family, they don't support my trading. This is a huge issue. And the reason why this is a huge issue is because, the reason why you're trading, now I get where you're coming from, right? I understand where you're coming from. You're starting to trade because you saw someone make a lot of money, or you saw me make a lot of money, or you saw someone else be very successful at trading, and now they have life on their own terms, or whatever that wish is, right? I understand. I totally understand that. And the reason why you're starting to trade is so that you can take care of your loved ones. You can take care of your wife, or you can take care of your kids, your girlfriend, your parents, your siblings. You can have like a secure future, because trading is where you're gonna make it, which is true, right? Which is true. But then you get this backlash from the people you love. You get this backlash from the people who you are doing everything this for, and you're like, man, what am I doing wrong? Like, I'm doing all this for them. They don't understand. I'm trying to trade. I'm trying to make money. I'm doing these analysis. And I'll tell you why you get that backlash. You get that backlash because you're not disciplined with time. A lot of you guys are going to be looking at the charts, are going to be looking at the phone while you're at the gym, while you're at the grocery store, or while you're at like a dinner date or having food or whatever you're doing. You're looking at the charts. You're looking at the charts while your spouse is talking to you or your parents are talking to you, and you're like, oh, no, I gotta focus on the chart. I gotta focus on the money. I gotta focus on the trade. That's not how it's gonna work. Of course they're gonna say, man, what's wrong with you? You're on the charts all the time. You have nothing to show for it. You've lost so much money. Some of you guys out there have lost savings. Like it makes no sense at all. Right? So if you're not respecting your own time with trading, how can you expect the people around you to respect your time that you're trying to devote to trading? There's a one simple fix with that. A lot of you guys are young, right? And you're like, okay, my parents don't support me. And a lot of you guys are married or in relationships, guys or girls, right? And you're like, hey, my spouse doesn't support me, because you're not respecting your time. And here's what I need you to do. right? The reason why is because you're like an addict for the chart. So what you got to do is you got to focus on, okay, you know what? I'm going to spend maybe 2 hours on the charts, and that's it. 1 or 2 hours on the charts, and then I'm done. Right? Then you got time for your kids, your spouse, your parents, your siblings, for sports, for hobbies and all that. Like, trading is not a hobby. Trading is a side income that may pay you well. It may pay you well, and a lot of people fail, right? And a lot of people fail is because they over devote their time to trading. You don't have to over devote your time to trading. You just got to fix 1 or 2 hours to trade, and that's it. Because guess what's going to happen? Are you ready? You know what's going to happen? Can you guess? What's going to happen is that if you're trading for, let's say, if you're devoting 2 hours to trading, let's say in the morning, after, let's say, 4, 5, 6 months, you're going to truly understand how price moves during those 2 hours. You're going to truly understand how your specific currency pair moves in those 2 hours at that same time every day. But if you're focusing on 8 hours and 6 hours, now you're mixing up sessions. You're mixing up currency pairs, because if you're trading gold, gold is not going to move the same way in the Asian session the way it moves in New York. Pound yen is not going to move the same way as it moves in a London session, as it's going to move in like, you know, the Asian session. It's going to work. It's not going to work like that. Right? So if you want people to really respect your time that you're trying to devote to trading, you have to set specific times, like 1 hour a day, 2 hours a day. That's it, maximum, right? A really big example is, if you're going to go to gym for 4 hours or 5 hours, you better be going to gym to become an IFBB pro. You know, you better go to the gym to become a bodybuilder, right? Like a professional. But a lot of us are not cut out for that. So a lot of us, we know that we need to go to the gym for maybe like an hour, hour and a half. And maybe in 6 months, we're going to be in a good shape where if we take off our shirt, someone's going to say, oh yeah, man, you got a great body. But we know it's going to take 6 months. Trading, same exact thing. It's the same game, right? You focus on 1 or 2 trades. In 6 months, someone's going to turn around and say, okay, hey man, like listen, you've been trading a specific pair for 6 months for 2 hours every day, and now you know what you're doing. Can you help me out with that? Can you help me out with my analysis? You think my analysis is right? So that's going to really help you, right? And then your parents, your spouse, your sometimes your kids, man, like you guys are old enough that you have older kids, and they may say, hey, mom, dad, what are you doing? You know, you're not making any money. You're not bringing any money back, right? So maybe they'll say, okay, you know what? I'm going to let this person be, because they're not overindulging themselves in trading. They're only focusing on, like, you know, 2 hours a day, and that's fine. You know, that's fine. They have like moderate results, and trust me, moderate results are going to come in. How are you? How are you? What's up? Okay, let's go to mama. Come. This is the big one. I want to trade full time. Isn't that just a beautiful dream? I want to trade full time. And let me tell you, trading full time comes with a lot of responsibility, right? Because first thing what you got to do is you got to look at it this way, right? Whatever you're doing now, if you have a business, you have a job, that job or that business, it pays for your bills, your rent, your mortgage, your insurance, your utility bills, all that stuff. So now you got to be able to trade in a way where you can substitute that income with trading, and all the money that you're going to make from your job or business, that's going to go in savings. But the money you're going to make from trading, that's going to go towards your bills. So if you really want to trade full time, or if you like that idea, or you want to chase that idea, you got to look at it this way. You have to trade in a way where you can say that, okay, if I'm going to trade slowly, patiently with some of the methods we discussed, what bill can I pay from trading? Like, can I pay my internet bill, which is going to be like $100, $50, depending on where you live? Or can I pay my, car insurance? Can I pay my utility bill, one utility bill? Or can I pay my gas for the car? Whatever the case is, and you got to go about that route slowly, and only then you're going to be able to say, okay, you know what? Now in 6 months' time, I can pay my rent, or I can pay my mortgage, or I can take care of that biggest bill that we have, and slowly I can see that I'm getting to the point where I may be able to trade full time, because trading or the money I'm making from trading is now, it's supposed to cover my entire bills for the month. Right? So this whole idea of trading full time, it's very attractive. right? It's very attractive, and I can tell you this much. It just grows over time. You guys a lot of you guys don't understand the power of slow gains, just chipping away at small bills for like 6 months, 12 months, and then getting to the point where you can pay your rent or you can pay your mortgage, and then you can say, okay, you know what? Now maybe I can take some time off from my main work and go all in on trading and see where it goes from that point. Right? Trading full time is not going to happen next month. It's not going to happen, in like 4 months, 5 months, 6 months. Trading full time, man, it's going to happen in, like, I would say maybe a year, like 8 months to a year, because you got to develop the confidence. You got to develop some experience. You got to be focused on 1 or 2 pairs. You got to be focused on your session, and you got to create this whole, life around the time that you're trading. Because in the beginning, when I started, I was trading in the morning, pre-New York time, New York Open, and everyone around me, they knew that, okay, Raja Banks is trading at this time, and we don't want to disturb him because he's going to trade at this time, and then he's done, right? And then slowly I started to say, okay, you know what, if I'm getting a withdrawal, what I can pay from this withdrawal? Can I pay my phone bill? Perfect. Can I pay my internet bill? Perfect. Utilities? Perfect. And slowly, once you get to the point where you pay your rent or you pay your mortgage, that's the point where you start to say, okay, you know what? Maybe we're going somewhere with this. Maybe we're heading in the right direction where we'll be able to say, okay, you know what? Now my entire bills from trading are paid by only trading 2 hours a day, 1 hour a day. And then slowly you're going to come into full-time trading. Right? So I hope this helped. There were a lot of psychological things that are involved. It takes time. You just got to give it time. You can't rush the process. Even with the prop firms, you just cannot rush the process at all. It's just not going to work the right way as you may assume it should work. Right? So take care. Hope this helps. Be safe and don't overtrade.